Ladies and gentlemen, welcome back to the channel. Thank you so much for being here as always. Today, we have back with us Brian from Santiment. We're going to be diving into what the crypto markets are looking like right now in the wake of the first rate hike, looking forward at what the markets might do given continued speculation about more rate hikes, conflict in the East, all that jazz. And we'll look at some key levels in the Bitcoin space, maybe some other cryptos. So Brian, thanks for being here, man.
Yes, sir. Thanks always for having me, Hashoshi. I'm really looking forward to diving into some numbers and seeing what these inflated markets, I should say, is relative. It could continue going forward, but seeing what these markets can do from here now that things have kind of rebounded after last week's FOMC announcement and tensions easing a bit, still plenty of real world stuff to worry about, but the crypto markets have looked pretty good here, as we can see just from the last 24 hours. We can see, if I can get that out of the way, we can see Bitcoin is up 3% in the last 24 hours. If we go back to the last week, it's up 7%. And then look at the gaudy numbers of many of these altcoins. You know, Ethereum Classic has been on an absolute tear, 76, Cardano at half that, 38%. ApeCoin 62, 46 for Chainbeing, all sorts of, widely respected and not so respected assets that have been pumping as of late.
Definitely. I mean, and I think social volumes too, if you look right there, right? The 7-day as it loads. Yeah. Lots of interesting disparity between some of this stuff, right?
Exactly.
Like social volume on Bitcoin.
So people are less interested in Bitcoin right now and much more interested in Ethereum. You know, the stable coins are being talked about a lot, which is interesting. Always controversies going on with USDT. I'm not quite sure what the USD coin added discussion is as of late. It could be nothing, but an extra 20% since last week means people are paying attention. Avalanche is getting almost double the amount of discussion. So that's something to pay attention to when too much euphoria or discussion is going toward alts rather than Bitcoin. It can be a bit dangerous because we need Bitcoin to always have a certain amount of limelight and attention and respect in order to keep the rest of the markets propped up so that whatever altcoins or S coins that you may have can continue to thrive.
Definitely. I mean, looking also at just what the cause and effect is on the rate hikes. So the result of the meeting, the Fed meeting, and what that means, what that has meant for the markets. This is interesting data for us. There was a lot of speculation. Hey, the rate hike's priced in. Where do you see that?
Yeah, so we take a look at just the last month of discussion related to FOMC or inflation here. And we can see there was one distinct spike on the 13th. I believe this was a couple days before. What was that? Like a Monday, right? So last Monday, there was discussion that it was kind of a known thing by then that the interest rates would be hiked. That extra 0.25% went up just a couple days later. And then notice how right after these spikes, it was essentially a bottom indicator. And since that time, it went from 37.8K up to where it is now, right at about 44K. That tells us that this, at least for now, looks to be a case of, sell the rumor and buy the news. Everyone was super duper worried about these rate hikes, considering that crypto is very, very closely correlated to traditional equities markets right now. So rate hikes in the equities markets could mean bad news for crypto. It was talked about all the way back here, even going back 6 months. People were already starting to get a bit concerned over inflation. You see spikes in February, spikes going back to November of last year. And this was, of course, the all-time high. So prices were retracing for many reasons, not just fears of inflation, of course, but it had been a known event that could negatively impact investments for quite some time. People were selling, anticipating that the FOMC would do exactly what they did. But this was kind of a case, at least as it appears now, of prices being kind of baked in by the time the news actually came forth, and everything happened exactly as expected. And then boom, now we're off to a decent recovery right now. It's certainly not back to where it was in November, but it's a start, right?
Yeah, definitely. I mean, a lot of people were really, really worried about this if it were to come to fruition. Although, if you really think about it, it was almost a foregone conclusion from the very beginning that there was
Right.
going to be action. And we will likely have more of this throughout the rest of the year. Is there anything, I think we talked about before we started recording, like May timeframe? There might be another one.
Yeah, I was thinking about what we might be able to type into our handy dandy search engine here to see what popped up. May and FOMC could lead to some results. I didn't really look at this before the call. Not really anything there yet. That is when the expected next discussion would be to hike things up even further. But for now, I think people are kind of still on the hangover part of the journey where the announcement just happened. We're now recovering a little bit, and people are still getting their bearings as to how to react to what just happened. But I think probably in about a month, that discussion, maybe even 3 weeks or so, is when discussions will really start to heat up for the next one.
Got it. And then, also you mentioned this, like you have this theoretical bottom signal when the announcement it was a done deal that there was going to be a rate hike. It was going to be announced. And then we started talking about like where we're going from here. And we made our way back up to the 44K-ish area. That seems to be like a psychological level for a lot of people.
Right. Yeah. We've had quite a bit of resistance right around here for most of the past month and a half or so. There were a few times that it got past 44K, and 45K is obviously the rounder number that people like to focus on. But for whatever reason, 44K over the last few times, it's always seemed to bounce right at it or right above it and then come back down to earth. We can see here the amount of times that mentions of 44K or the actual number 44,000 have popped up in social discourse communities such as Discord, Twitter, Reddit, or Telegram. And whenever there's a spike, notice how the price ends up dropping back down. This one happened kind of in mid retracement. This one was right at the top or so, give or take maybe a day or two. This one was pretty much right at the top, retraced. This one, another day or two delay before coming back down. And now we're seeing another spike. So the question is, are we going to see history repeat itself? Or is this going to be more of, people overreacting to this kind of pattern, trying to cutely sell off here and then watch prices kind of surge all the way to 50K? It's really tough to tell. And that's why we have on-chain metrics and all of these other things that show just how healthy the actual Bitcoin network and other altcoin networks are right now.
Yeah, that was going to be my next question, is what are you looking at right now data-wise to help you determine where things might go next?
There's usually anywhere from 4 to 6 main leading indicators that we look for at Santiment for like these swing trade kind of intervals. Macro wise, we've got things like dormant investments, whale activity to an extent can be more of a macro indicator. But things like circulation, that's definitely something to keep an eye on. This red line here through all of these one-day spikes, this is like a 30-day smooth moving average, and it's showing that it's mostly staying steady. This is the last 2 years, so I could zoom into just like the last 6 months, get a better peek, and it shows the same story. It's really been flat. On a typical day, there's around 190 to 200,000 Bitcoin moving, unique Bitcoin, so it's only counting each one once. And typically, if we start to see days like this, where it's 450K or above, that's a sign of a breakout. But it can also be the sign of a local top if this is like an isolated spike. So that's something to keep an eye on. We also like to look at daily active addresses. This is looking at the amount of unique addresses that are actually interacting on the BTC network on a day-to-day basis. So at least one transaction, either a buy, a sell, anything in between, then it'll show up as a daily active address. And right now, ever since the all-time high here, where we were seeing around 980,000 daily active addresses per day, it slipped just a little bit and is now sitting around 920. This is, of course, an arbitrary number, but if we look for around 1 million or more on a typical day, we've seen evidence of that being kind of a breakout. And we were seeing that back here in, actually going back a little further, if I go back to the last year, you can see the big swing that was happening in May as we were getting like 1.2 million, and then it started to drop down, right? And yes, we did recover. We even got a new all-time high, but this was kind of a flash in the pan compared to the more steady rise that was happening at the beginning of 2021.
Right. And I mean, if you also think about too, you look at the active addresses on the Bitcoin network, kind of an activity metric, but you also look at hash rate and difficulty, and those mining metrics have been bucking the trend in my mind. They aren't following the same cause and effect pattern that we've seen in the past, like all-time highs in hash rate being a positive indicator.
Yeah, we don't have a ton of hash rate metrics, but we do see some similar types of metrics that can show us kind of the same thing. Something similar might be, let me see, supply distribution. I'd say age consumed can tell you a lot. It's sort of in a similar way. What it does is it'll show, if I move down here, age consumed shows the amount of Bitcoin moving multiplied by how old those addresses were at any given time.
Yeah.
And the bigger the spike, the more likely there's going to be some sort of price direction change. And these are kind of the things that you mentioned that buck the trend and show when there might be a huge correction in order. If we go back to let's go back 5 years really quick, because this is a really fascinating one. We can see when the major spikes happened. It's not always the case, but generally they mark bottoms. Like the largest one here was kind of right at the bottom in November 2018. This one here marked the bottom right around late January, right before a big surge. And then, of course, the war news happened a few weeks later, and that changed everything. But age consumed is a nice one you can look at. We haven't really discussed much on this channel. Maybe on one of our longer calls in the future, I can go over it in more detail. But for people who use Santiment, I think this is a really valuable one for more macro price change leading indicators out there.
Absolutely.
We also have MVRV, which I think is always an important one to look at. Here, what we're seeing is when the 30-day trading average traders are above or below 0%, as you would expect when things are way above. That's when you see corrections like we did in December 2017, like we did in late December 2020. And then on the other side of the spectrum, look at how bottom indicators tend to occur in May, like right here when it was super duper negative. If we zoom in a little more to look at what's going on now, we see, the January one, like I said, that's when the MVRV really got low. And then early February is when it got super high. Corrections happened there, bounces happened there. And now we're in kind of a positive territory. Typically, we look at a danger zone to be right around 15%, somewhere around there. And then bottoms will be right around negative 15% around there. So if you ever see the MVRV above that, that is historically a very confident sign that we're going to see a price retracement. Historically, very confidently here, we can say there's going to be some sort of price bounce. So right now we're about halfway, maybe a little more than halfway toward that danger zone area. Mm-hmm. So it is on a higher risk area than usual right now if you're going to open a position or add to your position in Bitcoin. But it certainly shows that there's a little meat on the bone for things to continue rising before we get into the main area. And prices can continue to rise, and then people take profit so that the MVRV stays low and price can still go up. So there's many scenarios that can play out, but in a vacuum, this shows that we want to be a little more careful than usual right now.
Can you open up a little bit more on what the MVRV really represents for someone
absolutely.
who's watching this, never heard of it before?
So MVRV is essentially measuring the average trading returns for everyone on the network who has been in an investment over the past 30 days in this case, but we can look at different time intervals like 1 year, 1 day even. We like to look at 30-day because it's a nice kind of even swing trade interval between short-term and long-term, and usually has like a 1 to 3 day impact on where prices go instead of like months at a time or hours at a time. So we like MVRV for that reason, and it essentially is just going to show through all of the FOMO and FUD and buying high, selling low, or making good trades, how the average trader is doing. Because with crypto, just like any other sector, it is still a zero-sum game where the average returns of all trades summed together is going to be 0%. So if we looked at like the 10-year chart on this, it would still average out to be right around this line when combining all the high and low marks that have occurred. Therefore, when things get high, there's going to be some sort of event, either through a price retracement or just some big sell-offs that bring the MVRV back to zero. And same here, if things get too low, that's usually when people are really starting to FUD and claim that crypto is a joke or a scam, and then prices bounce and shut those people up fast because the MVRV and there's too much red in the streets essentially.
Right. Got it. Okay, that makes sense. I think just thinking about and understanding what the metrics mean, even in the most specific way possible, helps draw some insights from this type of stuff.
Yeah, and we also have a Santiment Academy here. It's essentially a glossary of every single term we have, and with it, you can look up any metric possible, check out what MVRV means, read all about them. And this is something that we always recommend people do before they get into, potentially a pro account with us, or just start to understand fundamental metrics and rely upon them for their trading. Once you understand all of these metrics in more detail, it can make a world of difference. So, obviously on our Discord, we're readily available to help. And on our Twitter, if people just want to drop a message to @SantimentFeed, we're more than happy to explain any metrics that you guys would like more clarification on.
Awesome. Yeah, I would definitely recommend people take advantage of that. Having data on your side is fantastic.
Definitely. Yeah. I mean, we've got a ton of success stories. We really do. People are especially when price tops are looking like they're about to occur. That's one of the hardest things for people to really, watch their portfolios go up 50% in a couple months and then say, I want to get rid of some of this amazing digital currency that's made me a bunch of money. It's really difficult unless you have these metrics saying, historically 9 out of 10 times with where we are right now, there's going to be a correction, right? Yeah. And that's how you do things, is you kind of make these educated guesses based on data and evidence showing what usually occurs when we're seeing this bullish or bearish divergence.
Yeah, override emotion with data.
Exactly, and that's something you and your community is well known for preaching yourselves, and keeping a level head and not just shilling every altcoin or NFT out there. It's about making sure to keep emotion out of it and understanding that whether you're up or down money, this is looking bearish or this is looking bullish, and you have to act accordingly.
Most definitely, without a doubt. That is the ethos of this show for sure. I mean, this just to pivot as well really quick, as we kind of come up on like the 20 plus minute mark. I mean, the supply on exchange, the supply versus what's circulating is a big one everyone talks about. Do you think that it is a metric people should focus so heavily on? I'm kind of in the middle on that one.
So supply and exchanges is definitely a more long-term indicator. I mean, if we were just swing trading based on this metric since May, when it's just plummeted from 14.3% on exchanges down to 10.18%, we would be absolutely perplexed as to why the prices aren't just shooting to the moon. And that's because this is way more of a long-term indicator. This is something that, more than anything else, is a justification that the asset is safe and not about to implode and go to zero, or even half, right? Because we know that there is less and less Bitcoin sitting on exchanges that is at risk of being sold over the last 10 months now, since this trend has really started. If we go back to the last 5 years, we can see, as the exchange was moving on to exchanges, peaking around February 2020, around 16%. This is when prices were actually having a hard time getting any sort of traction, and we were seeing, a legitimate bear market here, some encouragement here, and then another extended bear market here. And then finally, this was the sign when we started to steadily go down that a bull market could be legitimate. So this is kind of a validator more than anything. When supply is moving down consistently, it means that when that bull market comes, it's going to come quick and ferociously. So it's really about your risk tolerance more than anything. If you are able to position yourself for a bull run without it being clear that the bull run's already started, you're able to really capitalize, right at the beginning, instead of jumping in right here after all the FOMO has already begun.
Yeah, it's tough because it's kind of a lagging indicator. And while I like it because of what you said, right? It kind of shows the relative probabilistic risk of a huge market event at a given time. But in terms of like what the market's going to do next, it can sometimes be a little tricky to utilize this the way it's often misrepresented on, online and in tweets and stuff like that.
Exactly. Yeah, it can be deceiving, and like I said, you summed it up perfectly. It's a lagging indicator, and it's more of a validation that as long as the exchange continues to go lower, it generally will lead to good results given enough patience. And if you're looking for something a little more on a day-to-day basis, check out the circulation and daily active addresses, even whales to an extent. We typically like to look at the 100 to 10,000 coin hold addresses as the ones that are key to where prices will move next. Over the last 6 months, we can see that it's actually been pretty discouraging, because these large traders were holding 49.5% of the supply back in late October. They're down to 48.3. So they've dropped 1.2% of the supply. That may not sound like a ton, but if you look at, the last 5 years of data, there's some pretty clear evidence that when whales are accumulating, there generally will be an event to follow their path eventually. And when they start dumping, right at these tops here, like they did, that's a sign that you may want to start profit taking and at least de-risking.
Yep. I mean, these are, if nothing else, methodologies for your people to walk away with profits that they get to keep. And if you're a long-term trader, of course, or a long-term investor, maybe you can be a little bit more meager in your profit taking because you believe in something long-term. But I advocate for profit taking all the time. And if you can see something like this unfolding, you can capitalize on those gains and walk away with them, which is important.
Exactly. Yeah, you summed it up perfectly. It's like Hashoshi has said many times on his show, which I watch myself. Just be very, very level-headed when it comes to the volatile times that we're in right now, especially on the altcoin end. If you're in altcoins, I'm seeing prices bounce up and down 10% in single days right now. Yeah. And that's the time where you got to put your emotions aside and say, I have made this amount of money already. Even though it can triple in the next year or so, maybe de-risking and at least taking out my initial investment wouldn't be a bad idea.
Most definitely. So folks who are watching, if you want to get data like this, you can check out Santiment. Links in the description will be, of course, available, including to the Academy, which even if you're not using Santiment now, go on that Academy, learn about the metrics that are available, because they're invaluable as you kind of go and you start to approach this from a data perspective. And I think that will drive you to determine if this is a tool that you want to use. Most of all, Brian, thanks for coming and joining on the show to bring your insight.
It's been a pleasure, man. Yeah, always great catching up with you. I'm looking forward to doing it in a couple weeks here.
Yeah, we'll be back at it in a couple weeks, see what's happening in the markets at that time. You never know what's going to happen between now and then. So until then, folks, thanks so much for watching. Hope you have a great rest of your week. And until next time, cheers.